Today on Crypto Channel Direct, Goldman Sachs has completed an OTC crypto trade. Instagram could be an NFT market, and the BIS is getting serious about CBDCs. We also talk with Eric Martindale to ask him about what a new financial future could look like away from fiat. I'm Claire Ross-Brown, and welcome to CCD, where I'll be bringing you the news you need to know, powered by Concordium. Wall Street giant Goldman Sachs has made a big leap into the world of crypto after it announced its first over-the-counter crypto trade. And on Monday, the bank conducted the trade with Galaxy Digital. Both firms are calling the transfer a first-of-its-kind transaction by a major US bank. The transaction was done in the form of a Bitcoin non-deliverable option. Goldman Sachs and Galaxy have further detailed in the announcement that both companies have had an ongoing partnership. Galaxy adds that the OTC settlement is a continuation of the bank's partnership with Galaxy's Digital to deepen its crypto capabilities. While the transaction itself is nothing too significant, it's the knock-on effects that many are interested in. As Galaxy knows, this is a big step for Goldman and shows that they've taken their commitment to crypto services to a new level. And it's also an opportunity for other Wall Street banks to see what happens now that the door has been opened. Goldman executive Max Minton says that the executed transaction is a milestone, and in a press statement, Minton explained, "This is an important development in our digital assets capabilities and for the broader evolution of the asset class." Goldman Sachs has had an interesting relationship with cryptocurrencies and blockchain over the years, and in January, former Goldman Sachs CEO Lloyd Blankfein said that his perspective on cryptocurrency is evolving. Not too long after Blankfein's commentary, Goldman Sachs analysis warned that Bitcoin was susceptible to the Federal Reserve's interest rate hikes. But this is not stopping the Wall Street giant from paving the way for its clients to gain easier access to crypto, a direction the digital asset space has been looking to head into for some time now. Last week, Meta CEO Mark Zuckerberg confirmed that Instagram is preparing to support NFTs. And at this year's South by Southwest Festival, the CEO took to the stage to announce that his company is working on bringing NFTs to Instagram in the near term. But Zuckerberg was not ready to divulge too much more than that, adding that he's not ready to announce exactly what that's going to be today. But this teaser alone raises many questions about how this rollout would work, and which blockchain will the NFTs be deployed on? What payment channel will be used to purchase them? And will Instagram become a new marketplace for NFTs? And then there are questions about a competition with other platforms like OpenSea, Rarity, and Nifty Gateway. However, it also would be a logical leap for Meta and Instagram, with the parent company heavily invested in the future of the metaverse, and with that, NFTs. And additionally, many artists, musicians, and fashion designers use Instagram as a platform to showcase their creations. So if Meta allowed each image in a user's Instagram page to be monetized as an NFT, it would become a major disruptor in a market that's currently controlled by OpenSea. But it would also add a new edge to NFTs, which are still finding their feet in terms of having a use case beyond digital ownership. And additionally, Instagram has got all the makings of being an NFT marketplace if the technology can be seamlessly integrated. Would you be happy to scroll through Instagram and have the opportunity to buy NFTs at the same time? Let us know your thoughts in the comments below. The Bank of International Settlement has completed an experimental central bank digital currency platform pilot, and this is rolling out across central banks of Australia, Malaysia, Singapore, and South Africa. Dubbed Project Dunbar, the experimental program demonstrated that financial institutions can use CBDCs to transact directly with each other on a shared platform. It made the case for governments already looking to build alternatives for centralized payment gateways like SWIFT. And one alternative to SWIFT could very well be Bitcoin. A new study from Deloitte highlighted the potential of Bitcoin as a base from which to create a cheaper, faster and more secure ecosystem for central bank digital currencies. And Deloitte's analysis points out the need for a complete redesign of the traditional fiat ecosystem to overcome the impending issues of being slow and error-prone and expensive relative to performance in other high-tech industries. Opportunities within the CBDC and cross-border payments spaces have not gone unnoticed by other cryptocurrency platforms. So Ripple, for example, plans to give out 1 billion XRP in grants for developers as an extension of its XRP L grants program that launched last year. The developer grant is designed to encourage open source projects on the XRP ledger built for enterprise remittance assistance. And there's evidence of cross-border payments being used efficiently for good purposes. Crypto transactions have allowed Good Samaritans from around the world to send funds quickly to Ukrainians who are in need of food and military equipment for defense in the current war with Russia. What is the best settlement platform for CBDCs, Bitcoin, XRP, or something else? Let us know what you think in the comments below. We now turn to Eric Martindale from Fabric and Portal to discuss how we could overhaul global transactions. Eric, thank you so much for joining us today.
Thanks for having me.
Eric, we've just been discussing how the BIS is getting serious about CBDCs, but instead of CBDCs to improve upon international settlements, could it be that we need a total overhaul? And how does that look to you?
Yeah, I do think it is the case that we need a global overhaul. I mean, it's very clear, what the problem that Bitcoin set out to solve was. One of Satoshi's original quotes is that the root problem with conventional currencies is all the trust that's required to make them work. You look at the history of central banking, and you look at the BIS, and just how we've transitioned away from a commodity-backed currency to a fiat-backed currency, and that's true the world over. You're starting to see serious impact on the consumer's bottom line. That centralized trust problem is exactly the problem that Bitcoin set out to solve. So I do think absolutely the future is going to look much more closer to what Bitcoin is, which is a self-sovereign, totally self-owned system where you don't have to rely on a central party to manage the system to make it work.
Yeah, so do you actually think that Bitcoin or even the likes of Ripple's XRP are the answer to redesign of the traditional fiat ecosystem?
I do. I think Bitcoin represents a significant leap forward technologically, certainly with regards to the computer science of consensus and the challenge of adopting getting a consensus on a system globally without having that centralized trust. So I do think if it isn't Bitcoin itself, it's going to be something that looks exactly like it, which is, again, back to those core properties of self-sovereignty and being able to have that Swiss bank account in your pocket without having to rely on the trust of a third party. So I do think it looks a lot like Bitcoin.
Yeah. And how far away do you think we are then from seeing a new financial system? And also, can you kind of, from your viewpoint, paint us a picture of what it would look like? Or what it should look like even.
Yeah, absolutely. I certainly think that there is a significant risk in sort of going down, like I said before, this idea of the central bank digital currencies, because it represents more of the same security and surveillance panopticon. I think the system of the future, even of the now, is going to be much more self-sovereign, autonomous, without these sort of overhead gatekeeper types. That seems to be the direction that the general population is going in the first place, and it really absolutely is the direction that the technology was designed to implement. So I think it is certainly going to be a little bit more self-sovereign, just to repeat that same phrase again, but less in the hands of trusted third parties.
Yeah, but brilliantly summed up. Thank you so much, Eric, for joining us today.
Thanks for having me.
See you soon. Bye. In this week's Deep Dive with CCD, we ask, is crypto really a risky asset anymore? Because of their historical volatility, Bitcoin and other popular cryptocurrencies are placed firmly at the high end of that risk spectrum, and most advisors consider them so risky that they don't even add them to the spectrum at all. Investors also consider the correlation between assets in their portfolios, and they hope to put together negatively correlated assets so no one part of the portfolio is zigging while the other is zagging. It's currently assumed that cryptocurrencies are again highly correlated to the riskiest asset classes, but Bitcoin and Ethereum don't track as closely as many would assume to the most risky segments of the market. So if we compare Bitcoin and Ethereum to the major market indices of the S&P 500 and NASDAQ, Ethereum has recently begun to track much more like a stock than Bitcoin. At the same time, Bitcoin is actually tracking closer to a large cap value stock, and this graph shows the correlation of Bitcoin to the Russell 1000 value index. It averages a 60% plus positive correlation in most trading periods, and the top names in the Russell 1000 value index are Berkshire Hathaway, J&J, JP Morgan, United Healthcare, P&G, Bank of America, and Exxon. Thank you so much for joining us on Crypto Channel Direct, powered by Concordium. Now, don't forget to like and subscribe by hitting the button below, and we'll be back next week with the news that you need to know. Until then, I'm Claire Ross Brown. See you next time.